ExamPrep.School. Montana Casualty Insurance Exam. Exam code InsMT-Cas04 or OPMT-Cas04. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Insurance terms and related concepts. MT statutes, rules common to life. A and H, property, casualty. MT statutes talks rules common to property and casualty only. MT statutes rules. Pertinent to casualty only. Policy provisions. Types of policies, bonds, and related terms. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under a standard ISO commercial general liability policy, the term occurrence in coverage A is best defined as A, an accident including continuous or repeated exposure to substantially the same general harmful conditions. B, a sudden unintended event causing bodily injury that could not have been reasonably anticipated by the insured. C, a series of related negligent acts by the insured resulting in bodily injury over time. D, an intentional act or omission causing bodily injury which the insured knew would result. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The policy defines an occurrence as an accident, which explicitly includes continuous or repeated exposure to substantially the same general harmful conditions causing bodily injury. This precise phrasing distinguishes occurrence from other event definitions. Reason B is not correct. This describes an accident but omits the continuous or repeated exposure language required by the definition. Reason C is not correct. This focuses on a series of acts without capturing the policy's accident or exposure terminology. Reason D is not correct. Intentional acts are excluded and do not meet the accident-based definition of occurrence. Question 2. Which of the following best exemplifies the definition of property damage under coverage A of a standard ISO commercial general liability policy? A. Loss of use of rented scaffolding while awaiting repairs, despite absence of physical damage. B. Diminution of real property's market value due to shifting economic conditions. C. Cost to destroy and dispose of contaminated food products under a recall order. D. Lease revenue lost when a tenant vacates for reasons unrelated to physical harm. The correct answer is A. The policy definition of property damage includes loss of use of tangible property that has not been physically injured. The other options describe purely economic losses or recall orders, which are not covered as property damage. Reason B is not correct. Economic diminution without physical injury is excluded from the policy's property damage definition. Reason C is not correct. Product recall costs and disposal are business risks, not property damage under the policy. Reason D is not correct. Lost rental income without physical injury to property is not included in the property damage definition. Question 3. Under coverage B of a standard ISO commercial general liability policy, which offense is explicitly listed as a covered personal and advertising injury? A. Wrongful eviction, wrongful entry, or invasion of the right to private occupancy. B. Intentional destruction of leased property by a tenant. C. Failure of the insured to renew a property lease. D. Misrepresentation of financial statements for underwriting purposes. The correct answer is A. Coverage B specifically enumerates wrongful eviction, wrongful entry, or invasion of the right to private occupancy as personal and advertising injuries. The other options describe property damage, contractual breaches, or underwriting misrepresentations, which are not covered offenses under coverage B. Reason B is not correct. This relates to property damage by a tenant. not an enumerated personal and advertising injury. Reason C is not correct. Failure to renew a lease is a contractual issue and not a listed personal and advertising injury. Reason D is not correct. Misrepresentation for underwriting is outside the scope of personal and advertising injury offenses. Question 4. A customer slips on a wet floor in a restaurant and incurs $8,000 in medical expenses. The restaurant's CGL policy includes coverage C medical payments with a $10,000 per person limit. The restaurant does not admit fault. Under the coverage C insuring agreement, which statement is true? A. The insurer will pay only those medical expenses if the restaurant first admits legal liability for the injury. B. The insurer will pay the customer's reasonable medical expenses up to $10,000 regardless of liability if expenses are incurred within 1 year of the accident. C. The insurer will pay medical expenses but will subrogate the amount recovered from the customer after payment. D. The insurer will pay medical expenses up to the policy's general aggregate limit rather than the per-person limit. The correct answer is B. The medical payments insuring agreement covers reasonable medical expenses up to the per-person limit, regardless of liability, provided expenses are incurred within the policy's time frame. Reason A is not correct. Coverage C does not require an admission of liability before paying medical expenses. Reason C is not correct. Although the insurer may have subrogation rights, coverage C does not defer payment pending recovery from the injured party. Reason D is not correct. Medical payments are subject to a per-person limit, not the policy's general aggregate limit. Question 5. A general contractor's CGL policy has a $500,000 per occurrence limit and a $1 million general aggregate limit. The insurer has paid $400,000 for the first covered occurrence. A second covered occurrence results in $600,000 in covered damages. How much will the insurer pay for the second occurrence? A. $500,000 under the per occurrence limit, with no effect on the general aggregate. B. $600,000 since the general aggregate limit has sufficient remaining capacity. C. $500,000 under the per occurrence limit, with the excess $100,000 reducing the general aggregate limit. D. $400,000 because the per occurrence limit is reduced by the amount paid on the first occurrence. The correct answer is C. The insurer pays up to the per occurrence limit on each occurrence. Any amount above that will be applied against the general aggregate. Reason A is not correct. Payments under the per occurrence limit do reduce the general aggregate if the loss exceeds the per occurrence limit. Reason B is not correct. Coverage for each occurrence is capped by the per occurrence limit, regardless of remaining aggregate. Reason D is not correct. The per occurrence limit resets for each occurrence. It is not reduced by prior payments. Question 6. A manufacturer's CGL policy lists a $2 million general aggregate and a $1 million products completed operations aggregate. 10 months after sale, a finished product injures a consumer, and the claim totals $1,200,000. Which aggregate applies to this injury claim? A. The per occurrence limit applies, and no aggregate limit is affected. B. The general aggregate limit of $2 million applies since the injury occurred after the job was completed. C. The product's completed operations aggregate limit of $1 million applies first, with the excess subject to the general aggregate if available. D. Both aggregates apply concurrently, reducing the available limits by the full claim amount. The correct answer is C. Injuries arising from the products. Completed operations hazard count first against the product's completed operations aggregate, with any excess potentially affecting the general aggregate. Reason A is not correct. Products completed operations claims count against an aggregate limit rather than only a per occurrence limit. Reason B is not correct. The product's completed operations aggregate applies to injuries after job completion, not the general aggregate first. Reason D is not correct. Aggregates are applied in sequence, not simultaneously. The product's completed operations aggregate is exhausted first. Question 7. An insured based in Texas ships an unsupervised prototype to Mexico for testing. While in Mexico, it injures a local technician. The company's CGL policy defines coverage territory as the United States, its territories, and Canada. Under the standard territory definition, what is true? A. Coverage applies if the claim is brought in a U.S. court under the policy's jurisdiction clause. B. The injury is covered because products completed operations liability extends worldwide. C. The injury is not covered because it occurred outside the policy's defined territory. D. Coverage applies only if the prototype was shipped from the U.S. and the technician sues in Canada. The correct answer is C. Standard CGL territory restricts coverage to the U.S., its territories, and Canada. Injuries outside that territory are excluded. Reason A is not correct. Jurisdiction clauses do not expand the territory. Claims originating outside the territory remain excluded. Reason B is not correct. Products completed operations extends coverage only within the defined territory, not worldwide. Reason D is not correct. Coverage territory is fixed. Shipping origin and lawsuit location do not extend coverage beyond defined areas. Question 8. A corporation's CGL policy names it as the insured. Which individual qualifies as an insured under the policy's Who is an Insured clause? A. A shareholder acting in any personal capacity unrelated to corporate operations. B. An independent contractor hired by the corporation for a one-time construction project. C. The spouse of a shareholder when attending a corporate social event. D. The company's vice president while conducting business duties on behalf of the corporation. The correct answer is D. Under Who is an Insured, officers and employees are insured while performing duties for the corporation. Independent contractors and personal acts are not covered. Reason A is not correct. Shareholders are insured only when performing duties as an officer or employee for the corporation. Reason B is not correct. Independent contractors are not insured unless specifically endorsed on the policy. Reason C is not correct. Spouses are not insured unless they are officers, directors, or employees acting in that capacity. Question 9. Under the personal auto policy's Part A insuring agreement, the insurer agrees to pay all sums that an insured becomes legally obligated to pay as damages because of bodily injury or property damage arising out of the ownership, maintenance, or use of a covered auto. Which of the following best describes the coverage provided by this insuring agreement? A. Payment of medical expenses for the insured and passengers injured in an auto accident. B. Indemnification of the insured for compensatory damages that the insured is legally obligated to pay others for bodily injury or property damage. C. Payment to repair or replace damage to the insured's covered auto resulting from a covered loss. D. Reimbursement for defense costs and expenses without regard to the insured's liability. The correct answer is B. The correct answer is that this insuring agreement provides indemnification for damages the insured must pay others for bodily injury or property damage, as specified under Part A. This agreement does not cover medical payments to the insured, physical damage to the insured's own auto, or standalone defense cost reimbursement. Reason A is not correct. Medical payments to the insured are covered under Part B, not under the liability insuring agreement. Reason C is not correct. Physical damage to the insured's own vehicle is covered under Part D, not Part A liability coverage. Reason D is not correct. Defense costs are supplementary payments, not part of the core liability insuring agreement. Question 10. Under the Business Auto Coverage Forms, Section 2, Ensuring Agreement for Liability Coverage, which territory is covered for claims arising from accidents involving covered autos? A. Only the United States. B. The United States and Mexico. C. Worldwide, except Canada. D. The United States, its territories and possessions in Canada. The correct answer is D. The correct answer is that liability coverage under Section 2 applies in the United States, its territories and possessions, and Canada. Coverage does not extend to Mexico or worldwide unless endorsements are added. Reason A is not correct. Coverage extends beyond the United States to include its territories, possessions, and Canada. Reason B is not correct. Coverage does not include Mexico unless a specific endorsement is added. Reason C is not correct. Coverage territory is not worldwide and specifically includes Canada rather than excluding it. Question 11. In the Business Auto Coverage Form, which covered auto symbol designates coverage for any auto? A. Symbol 1, any auto. B. Symbol 2, owned autos only. C. Symbol 7, specifically described autos. D. Symbol 9, non-owned autos only. The correct answer is A. The correct answer is that Symbol 1 designates coverage for any auto, providing the broadest scope of insured autos under the form. Reason B is not correct. Symbol 2 limits coverage to autos owned by the named insured, not any auto. Reason C is not correct. Symbol 7 applies only to autos specifically listed in the schedule, not any auto. Reason D is not correct. Symbol 9 covers only autos not owned by or hired to the insured. Question 12. Linda owns a 2018 Toyota covered under her personal auto policy. She lives alone. One afternoon, her friend Marcus borrows her car with Linda's permission to run errands. On the return trip, Marcus collides with another vehicle, injuring the driver. Under the liability section of the policy, who would be considered an insured for this accident? A. Linda's cousin Carol, who lives in another state. B. Marcus, who borrowed the car with permission. C. The injured driver. D. The tow truck operator who towed the car after the accident. The correct answer is B. The correct answer is Marcus, because a permissive user of the covered auto is insured under the liability section of a personal auto policy. Reason A is not correct. Carol lives out of state and never operated the covered vehicle, so she is not an insured under this policy. Reason C is not correct. The injured person is a third-party claimant, not an insured under the liability section of the policy. Reason D is not correct. The tow truck operator providing post-accident aid is not covered as an insured driver for liability. Question 13. Logi Corp's business auto policy provides liability coverage only for autos the company owns. Chris, an employee, drives one of Logi Corp's covered delivery trucks for a customer drop-off. Dana, an independent contractor, uses her personal van for company errands, and Eve, a third-party vendor, rents a van to make deliveries. After an accident injures a pedestrian, which individual qualifies as an insured under the policy's liability coverage? A. Dana, the independent contractor using her personal van. B. Chris, the employee driving a covered truck. C. Eve, the third-party vendor renting a van. D. The pedestrian injured in the accident. The correct answer is B. The correct answer is Chris because the policy covers liability for autos owned by the business when driven by an employee in the course of business. Reason A is not correct. An independent contractor's personal van is non-owned and not covered under a policy limited to owned autos. Reason C is not correct. A rented van is a non-owned auto and not insured when the policy covers only owned autos. Reason D is not correct. The injured pedestrian is a third-party claimant, not an insured under the liability section. Question 14. After a covered collision, Amy's medical payments coverage paid her and her passenger's ambulance and hospital bills. Later, Amy trips over a tool and injures herself while performing maintenance on the same vehicle in her driveway. Which of the following would be excluded under her medical payments coverage? A. The passenger's emergency room bill for injuries sustained in the collision. B. Funeral expenses for a pedestrian killed in the collision. C. Dental treatment for injuries related to the collision. D. Medical costs arising from injuries during vehicle maintenance. The correct answer is D. The correct answer is the medical costs from maintenance because medical payments coverage excludes injuries sustained while using the vehicle for maintenance or repairs. Reason A is not correct. Emergency treatment for collision injuries is covered under medical payments. Reason B is not correct. Funeral expenses for a covered fatality in the accident are included under medical payments. Reason C is not correct. Dental services for collision-related injuries are covered under medical payments. Question 15. After a covered collision, Natalie incurs $2,500 in medical bills and misses 2 weeks of work due to her injuries. She also hires cleaning help to perform her usual household chores. Which coverage in her personal auto policy would reimburse both her medical expenses and compensation for lost household services? A. Personal injury protection. B. Liability coverage. C. Medical payments coverage. D. Uninsured motorist coverage. The correct answer is A. The correct answer is personal injury protection because it is a no-fault benefit that covers medical costs as well as lost wages and household services. Reason B is not correct. Liability coverage pays third-party claims, not the insured's own medical or service losses. Reason C is not correct. Medical payments coverage reimburses only medical and funeral expenses, not household services. Reason D is not correct. Uninsured motorist coverage applies only when the at-fault driver lacks insurance. It does not reimburse household services. Question 16. While driving home at night, Karen is struck by a vehicle that fails to stop and cannot be located by police. She sustains significant medical bills. Which coverage on her personal auto policy would respond to her claim? A. Medical payments coverage. B. Liability coverage. C. Collision coverage. D. Uninsured motorist coverage. The correct answer is D. The correct answer is uninsured motorist coverage because it responds when an unidentified or hit-and-run driver causes injury and cannot be pursued under liability. Reason A is not correct. Medical payments coverage only pays medical costs regardless of fault, but has separate limits and does not require an uninsured driver trigger. Reason B is not correct. Liability coverage applies to third-party claims against the insured, not losses suffered by the insured. Reason C is not correct. Collision coverage pays for damage to the insured's vehicle, not bodily injury to the insured. Question 17. Under a standard workers' compensation policy, how many days must an injured employee wait before statutory weekly income benefits commence under Part 1 elimination period? A. 14 days. B. 7 days. C. 5 days. D. 3 days. The correct answer is D. The elimination period under Part 1 typically requires a 3-day waiting period before weekly income benefits begin, as specified in standard workers' compensation provisions. Reason A is not correct. A 14-day waiting period is not consistent with the standard workers' compensation elimination period. Reason B is not correct. The 7-day period is longer than the standard 3-day elimination period used in most state statutes. Reason C is not correct. A 5-day waiting period exceeds the typical 3-day statutory requirement under Part 1. Question 18. Under Part 2 of the Standard Workers' Compensation and Employers' Liability Policy, coverage is provided for the employer's liability arising from which of the following exposures? A. Payment of statutory benefits mandated by workers' compensation laws. B. State-administered occupational disease compensation. C. Common law claims brought by employees for work-related injuries. D. Property damage claims by third parties unrelated to employee injuries. The correct answer is C. Part 2 covers employer liability for common law claims brought by employees for workplace injuries, including legal defense and judgments beyond statutory benefits. Reason A is not correct. Statutory benefits mandated by workers' compensation laws are covered under Part 1, not Part 2. Reason B is not correct. Occupational disease compensation administered by the state falls under Part 1 statutory benefits. Reason D is not correct. Property damage claims by third parties are unrelated to employee injury liability covered under Part 2. Question 19. A warehouse worker suffers 2 injuries. His employer fails to maintain guardrails on a conveyor belt, and later a co-worker intentionally pushes him into the machinery. After filing a workers' compensation claim, the worker seeks further legal action. Under the exclusive remedy doctrine, which additional legal action can he pursue? A. A common law negligence suit against his employer for guardrail maintenance failure. B. A bad faith insurance action against the workers' compensation insurer. C. A consolidated legal action against both employer and coworker in one lawsuit. D. A civil tort action against the coworker for the intentional push. The correct answer is D. The correct answer is a civil tort action against the coworker because the exclusive remedy doctrine bars common law suits against the employer but does not preclude intentional tort claims against third parties. Reason A is not correct. Negligence suits against the employer are barred by the exclusive remedy doctrine once workers' compensation benefits have been elected. Reason B is not correct. Bad faith actions against the insurer are also precluded by the exclusive remedy doctrine and related statutory limitations. Reason C is not correct. Combining employer and coworker in a single tort claim is impermissible. The doctrine only allows separate third-party actions for intentional torts. Question 20. An accounts manager is instructed to deliver month-end financial reports to a post office off-site. After leaving work, she walks to the post office along her usual commuting route and slips on an ice patch, fracturing her wrist. Under the arising out of employment standard, is her injury compensable? A. It is compensable because she was performing a special errand for her employer. B. It is compensable because travel to the post office is part of her usual commute. C. It is not compensable under the going and coming rule. D. It is not compensable because injuries occurring off the premises are excluded. The correct answer is A. The correct answer is that the injury is compensable as part of a special errand, since delivering reports off-site at the employer's direction meets the arising out of employment standard, overriding the going and coming rule. Reason B is not correct. Usual commute reasoning does not apply because this trip was undertaken at the employer's specific instruction, not part of routine travel to work. Reason C is not correct. The going and coming rule is overridden by the special errand exception when travel is required by the employer. Reason D is not correct. Location alone does not determine compensability. Performing a task on behalf of the employer, off-premises, can still qualify. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.